Nowadays, you don't have to do accounting manually like they teach you in college. Softwares are becoming more and more sophisticated since the early 2000s. By now, after the advent of ChatGPT and the consortium of AI like Gemini, Copilot, Grok, and so on, in combination with the software that already existed, accounts and finance have reached such a level of automation that the syllabus shouldn't be teaching the students about the procedures of accounting and finance. Instead, they should be teaching how to use software and AI to keep accounts and make financial reports, how to analyze them, and how to build strategies. Myself, not being formally educated in accounting, have developed real accounting and finance outputs using AI, whereas earlier I would have had to rely on a team of accountants, chartered accountants, and financial strategists. The world has changed for accountants and finance specialists. It's not going to happen tomorrow. It has already happened today. However, just because we now have the calculator and even advanced scientific calculators to solve equations in calculus, trigonometry, algebra, and even calculus, we all know it doesn't mean that we shouldn't be teaching math to the young generation. But in the case of math, it is well known by both the teachers and the students that, as I have discussed in my earlier chapter in mathematics, it's more of a mental exercise and training the mind in logical thinking than us humans trying to compete with computers by memorizing the theories and increasing the speed of our calculations. What I'm proposing is there should be a similar shift in the pedagogy of accounts and finance. The same course must be taught, but the objective must be different. It must be to learn how computers and AI process records to produce reports. So we have to teach the students to think like architects of software. They must know the flow or the algorithm, the rules that must not be broken, the various tables and their interrelationships. But accounting can no more be done by humans. Computers are far better, cheaper, and faster and more accurate. Even if we are confused about certain entries, the AI is better at finding a solution because it has a huge data set as compared to a new accountant. The same logic of learning the same thing but with a different objective applies to finance also. We don't need to be spending hours, days in reconciliation when we can have AI-powered software do that at the speed of light. Yet, we must know what is it that we are reconciling and what's the algorithm and what are the rules that must be followed and what are the formulas. The same holds true for the analysis of financial reports. AI can give us a much better analysis and conclusion, but again, using the same logic as earlier, we must know the formulas and the theory behind the patterns that large language model used. Even AI makes mistakes, so by knowing the inner workings of account and finance, we can correct it. Then it will learn from us. So this is the reality of account and finance in the real world, both of corporate finance and individual finance. As a student, what I suggest to you is to still grind and think that there are no computers while you are studying in class 11 and 12, and even in your bachelor's and MBAs. Study accounts and finance as if there were no software or AI. I was able to use AI to write this chapter instead of hiring a team of professionals and teachers because of my strong mathematical background in my college days and engineering days. So there is no substitute for mental or cognitive muscles that are developed through rigorous practice, diligent consumption of books and lectures. Now let me go into the black box of accounting first. As we discussed with the tree analogy, the trunk is the actual accounting process, and the roots are the source documents, and the fruits are the financial reports. I have called this system a black box because this is how it feels when you interact with software of accounts. Some very smart accountants and chartered accountants sat with system architects and they designed the algorithms, the tables, the formulas that would replicate tedious, lengthy manual processes of accountants into zeros and ones. So first let's go into the trunk part of that black box. Every accounting system uses the double entry system. It means that every financial transaction must have an effect somewhere else. For example, if you buy a phone, then cash in your bank decreases, but there is an addition of a phone in your assets. Mind you, I'm no teacher of accounts or chartered accountant. I'm not here to be accurate and to help you pass or get high marks in your exams. All I want to do now is to help you love this fabulous subject of accounts and finance. Now that you know about what the double entry system means conceptually, let me tell you how the black box makes use of that principle. It begins with the roots or the source documents. As you can see, there are two types of these. One is the main and the others source documents. Under the main source documents are invoices for sales and purchase. Basically, it means that you have sold or bought something. However, it could be on credit or cash. Then we have receipts for sales and purchase. It means that you have given cash or received cash. Then there are the journal entries. They are very important to create the effect that we discussed earlier for the double entry system. So in the earlier example, if you are a company, you would make a sales invoice for having sold that phone, and if it was in cash, you would have also made a sales receipt. Then you'd need to make a journal entry to reduce that phone from your assets. The other source documents are the bank statements, payroll records, credit memos, utility bills, depreciation schedules, loan agreements. They are all entered into the trunk or the accounting system using journal entries. Now, once the source documents are entered into the accounting process, the table or ledger in which they belong must be decided. For simplicity, there is the general ledger and the party ledger, for example. They contain a table with 3 rows. That is the core of double entry system. The first column is the particular that describes transaction. The second column is called the debit, and the third column is called the credit. The whole pyramid of our entire accounting system throughout the world and the centuries would fall like a domino effect if the rule of debit and credit were not followed. Yes, it's that important. It's a pain. I will talk about it in a later section in more details, but for now I just want you to have a concept of it. The rule is that there are some transactions for which the number or amount is placed in the debit column, while for other transaction is placed in the credit column. And that is the most important thing as an accountant you should know. For easy remembrance of the debit credit rule, there is a very popular acronym called DEALER. D stands for drawing or dividends, E for expense, and A for assets. So whichever transaction is related to these 3 headings, whatever amount comes, write a number in the left column or debit. Let's say in the above example, as the buyer, you bought the phone for $100. That's an expense. So you would put that $100 in the left column or the debit. It's that simple. The next part of the acronym is L, which stands for liability, E for equity, and R for revenue. Here, if you want to increase any of the headings in this set, you must put the amount in the right column, that is the credit. Yes, it's exactly the opposite. It follows that if you want to decrease an amount in one of the headings of the first set, DEA, then you must put that amount in the right column or credit. Similarly, if you want to decrease an amount in the second set of LER, then you must put the amount in the left column, debit. It sounds a bit confusing, but that's all you have to know. For a computer software, that's a piece of cake, just an algorithm. For us, there are so many questions. Why? Why not? What if? What then? Well, in short, this debit credit rule is needed to keep the integrity of the whole accounting system together. It's the string that goes through every transaction. If it was not there, the double account entry system wouldn't be possible. There would be no way to have a check and balance, as you will see in the third part shown in the diagram as the trial balance. Now all those entries in the various ledgers must be tested for the satisfaction of accounting equation asset is equal to liability minus owner's equity, and that will be proven if, as shown in the diagram, all the entries are placed in a single table of 3 columns like the one we discussed earlier. So if that account name or transaction had the amount written on the debit column, it will also be in the same debit column in that trial balance. The only difference is that whereas the entries were made in different ledgers or tables before, in the trial balance they're all combined together. What should happen if all the entries follow the debit credit rule correctly, which is essential to get the proper reports, then total debit will be equal to total credit for all the headings, as you can see under the totals there. What this means is that all the double entries were made correctly and there's nothing fishy going on in that company. Now you know what goes on in the black box. I told you it's not easy and it's painful. All the things that I've just told you is now done with software. Even if the debit and credit didn't balance at the end in the trial balance, whereas before the humans would try to find out what was the cause, nowadays AI does it much faster and better. Yet, in order for us to use that software and AI, we must be competent enough to know the architecture of that black box. We are not earnest enough to take the pain of studying the definitions, rules, and theories. Then, even in the age of automation in AI, we'll be just the peons. In this chapter, I am teaching you to be the king in this new era of accounting and finance.